All right, what's up? This is ET, and today I'm gonna be showing y'all how I finally got out of eval jail on my Propfirm. I was in the eval jail for around like 9 days. I feel like I was in there. I was in there because I was making 1,500, losing 1,500, losing 1,000, making 1,400. So it just kept going back and forth, and I decided to take a break because I don't really like got accounts to spare like that. So like I took a break and paper traded for about a week. Probably a week and a half, paper traded for a week and a half, made sure I was like, got my head back on straight, tried to figure out my strategy a little bit more, tried to think better, try to get better setups and things. So, and I came back in like 3 days, because in 2 days I made 1,300, almost 1,400. The second day I made 1,600. My consistency rule is messed up, so I had to trade the third day, make around 300 to fix the consistency, because you know it's a 50% consistency. And I passed it today, and today I'm gonna be breaking down what trade I took to pass my eval. The trade was small; it wasn't that much. I only need to make 300. We made more, but I only need to make 300, so I exited kind of early. And yeah, let me show y'all the trade I took. So when market opened at 8:30 my time. So I wake up at 8:30, and I wake up at 8:10. I mark out these key levels right here. Let me go on the hour time frame. I mark out these key levels, which are draws on liquidity. These red lines are just like high time frame draws on liquidity. These different color ones are the ones I use because I have the ICT kill zone. ICT kill zone indicator, and so I like, if this one blue I make the line blue, if this one purple I make the line purple. So going into today, we were pretty bullish. Really, I don't really use bias. I just go based off what the market is telling me. So I didn't really have a bias, but I had a thought we were going up, but we did have these draws on liquidity down. We had this London low that got hit right there, like before market open. So we were pretty bearish, and we made this big imbalance right here that I knew price was gonna want to fill. The key level got hit right here. The Asia session got hit. So market open, and it started dumping down automatically right here. It started dumping down, and I seen it dump it down. I just like waited. I tried not to trade that early during market open. I just waited, and about right here around 9:39, I seen price make this big fair value gap right here. I have my fair value gaps at green. So when it's green, when it's just a regular fair value gap, I have it as green. And price, excuse me. Bless me. So price, it came down, and I knew it was gonna pull back because we were just dumping too much to not have a pullback. I knew it was gonna try to retrace at some time. So it retraced, it pulled back into this fair value gap, and it inversed it. At first, I thought it was just gonna fully, strongly inverse it very fast, give me a V-shaped recovery. No, not V-shaped recovery. I thought it was gonna fully inverse it, but it did end up inversing it. But as you can see, the inversion, it took from this candle, it took 1, 2, 3 candles to inverse it. And don't quote me, but just based off my personal experience, when price takes that long to inverse something, it's probably not gonna be a full reversal, a full change in direction. It's probably just gonna be a fake out, like a minor retracement with high probability that is gonna re-inverse again. And so since the inversion was so weak, I kind of didn't, because usually some people just enter right off inversions, but I kind of I waited because I knew it was a weak reversal. I waited, and price came back down and re-inversed it. As that happened, let me take this off. As that happened, price came back down. I went from the highest, or the newest high, to the newest low, which is this high right here. And this is a high because you got the red candle and the bullish candle. I went from the newest high to the newest low, and price came up into equilibrium. It rejected down, re-inversed this gap, re-inversed this gap with this candle right here, with that candle right there, that black candle right there. It came back up, retested this gap, and it really retested it tested this fair value gap right here. Let me size that. It tested this fair value gap right here. As you can see, it's very small. Let me try to make it a color you people can see. And it tested this fair value gap right here. This orange fair value gap right there. Price came into it. It didn't inverse it. It rejected with the next candle. And it rejected strongly with this candle. So when I seen that, I seen a re-inverse. I seen a re-inverse. I seen price came into equilibrium. I seen the 5 minute SMT, this SMT right here. See right here at 9:20, failed to take out this high, but on ES it took out this high, the 9:20. I lost it. Yeah, the 9:20 high. It took out this high. 9:20. It took out that high, showing bearish SMT. And so it was the 5 minute bearish SMT, tap into equilibrium, the re-inverse, the slow inversion, the test of this fair value gap, the respect of this fair value gap, and rejecting off this re-inverse, the re-inverse. All of that was my confluence. So I entered right here at 950, and I only needed $400, so I entered 3 contracts, and I had a stop of 73 points to 102 points. As you can see, price didn't even come into a drawdown at all. Gave me good strong candles, and hit TP. I closed out around right here, because I didn't need that much. I didn't need that much. I just needed the 400. So if I would have ran it, it probably would have been around like $600. So I closed right there and passed the eval. Yep, that's the trade breakdown. Yeah, like I said, I don't really have a strategy. Yeah, and that's how I passed my second eval. This is my second time passing the eval. And yeah, I'll catch you guys on the next video.